This is Matt Russell from the FX Power Course, and welcome to the DailyFX walkthrough.
So here are the four pairs that I will be discussing this evening: the Kiwi dollar, Aussie dollar, the Euro dollar, and the dollar yen. So let's go ahead and pull up the charts, and let me slide this over a little bit. The first chart is the Kiwi dollar. As I mentioned in last report, I was looking for long trades. I was personally stopped out at this area. Over here, I re-entered on a close above the 54.10 area, which was a very short-term resistance line, and I'm currently in this trade now on the long side. As I mentioned, I was expecting an upside reversal. That is what we have. So let's say you were listening to the report, you did not find a good long entry. What we might do now is draw a simple support line, just connecting the most recent lows, and look to enter along that support line with a stop just beneath it. So right now, if prices were to come down and stop me out, my stop is located directly beneath that resistance line by about 25 pips, and I am trailing that up. As time passes, this line is upward sloping, so my stop is moving up along with price. The next chart is the Aussie dollar, and not much has changed here. I mentioned this borderline doji pattern, how we might look to enter. Prices did not come down to the low of the doji, giving us a good risk-reward entry. I did not enter this trade, but hopefully you out there, maybe you entered, as prices have rebounded off that formation of the doji. I would mention possible resistance at the former support line. The next chart is the Euro dollar, and not much has changed here as well. Prices have rebounded above the top of this channel line, but what I'm going to do now, I'm actually going to redraw this line, including the high here around the 147 figure, and redraw this line. And this is how I would gauge the pair right now with this resistance line, and look for play a breakout above this resistance line if it were to occur, and see how the market reacts to the upper resistance line as well. I did not find a good risk-reward entry on this pair. Also on the very short term, if you are aggressive on the long side, we can also do the same thing that we did with the Kiwi dollar, which is to add a simple support line to the pair here with the low just below that 130.50 area. But again, this is a very steep and short-term support line, so the odds of it holding are not very high. But again, this is if you are a slightly more aggressive trader. The last chart is the dollar yen, and as I mentioned during the last report, all previous reports are located directly above this video if you're viewing this on the DailyFX forum. I mentioned a very short-term trade idea, a breakout above the 90 figure. I personally entered here on a close above the 90 figure, as I was mentioning in the last report, and I mentioned how there could be 100 pips to the upside. That's what we got. I personally did take my profits actually around the 80 area, so I didn't squeeze all 100 pips out of that trade, but right now I am flat this pair. Really no indication as to what's going to happen here, so I'm just going to keep my eye on the short-term charts to see if anything does present itself. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.